What's good, everybody? Welcome back to the Financial Freedom Show with Chase Lawson. I'm Chase Lawson. I'm a personal finance aficionado and the author of the best-selling book, Financial Freedom, Breaking the Chains to Independence and Creating Massive Wealth, which you can pick up on Amazon. With this show, I take a variety of personal finance topics and break them down to make them simple to understand so that you aren't lost when it comes to your own financial situation. If you have not yet subscribed, please make sure you do so that you don't miss any great content. We've got an exciting episode today, so let's dive in. Sometimes brand loyalty can really pay off, whether it's with airlines and hotels that provide frequent flyer miles or points that you can use to pay for a future flight or stay, or with retailers that may offer member-only specials or rewards, or even with credit card providers that may offer bonus cashback offers you can truly cash in on. In fact, I just recently earned the companion pass with Southwest, so my wife and I can get buy one, get one free flights throughout the end of next year, though not sure how much traveling we'll get to do with everything that's been going on lately. However, with that being said, sometimes loyalty can cost you, and potentially pretty sizably. One of the biggest examples of that is with insurance. Car insurance is required for drivers in every state except for New Hampshire. So if you drive, this is something you must purchase and is just another cost associated with having a car. These costs can really add up over time, but it is truly worth it as it's there for you in the event you need it, whether it's through your fault or someone else's. However, just because you're required to have it doesn't mean you shouldn't shop around periodically. In fact, about a year after switching car insurance providers, I actually switched back to the insurance provider I had prior to switching as they were now cheaper. Rates can and will change from time to time, and what's cheaper one year may be more expensive the next and vice versa. For my particular situation, my wife and I were paying about $1,293 combined for our recent 6-month renewal, but after switching, our new rate for comparable coverage is only about $736 over 6 months, a savings of $557 for the 6 months, or about $1,113 for a full year of coverage. Various factors impact the rates you pay for your insurance, some of which you can control, and others you can't really control. Essentially, insurance providers rate you on these factors based on both past history and future projections, with the goal being for them to pay out less than they bring in, as obviously the goal of any business is to make a profit. So they balance this out while trying to still be competitive so that they can earn your business. And while all insurance providers typically rate based on the same factors, each company weights each factor differently. So while your particular profile may be more advantageous with one company one year, it may be more advantageous with a different company in a future year. So it always pays to shop around. In fact, car insurance premiums vary based on the rating factors they use, the statistical information they look at, their own claims experience, and the cost of doing business. They each have their own unique formulas to assess risk, along with their own costs in order to conduct business. And if they have a lot of claims one year, more than they expected, this could lead them to suddenly having to increase rates across the board the next year. Like I said, things do change. There are essentially 13 factors that go into determining your car insurance rate. With each of these factors, insurance companies will use actuaries to determine how risky groups or subsets are. The riskier a group is perceived to be in regards to chances of making a claim, the higher their rate will be, all else being equal. The factors that you cannot control include your age and gender. Generally, the younger you are, the riskier you are perceived to be, and the more likely you are to get in an accident. As such, those aged 25 and under typically carry a premium on their insurance, oftentimes as much as an added 20%. So unfortunately, if you're under 25, the only thing you can do is wait, and your insurance should go down as you get older. On the other end of the spectrum, senior drivers are also considered riskier due to slower reaction time. According to the Insurance Institute for Highway Safety, the sweet spot is between ages 30 and 69, as those are the least likely to get in an auto accident. Secondly, gender plays a role in one's auto rate. Unfortunately for me and other guys listening, males are more expensive to insure than females. The Insurance Institute for Highway Safety notes that men typically drive more miles than women and engage in riskier driving behavior such as speeding, DUIs, and not using a seatbelt, as well as being more likely to be involved in more severe accidents. As such, females will typically have lower auto premiums than males, all else being equal. Thankfully, the other 11 factors you at least have some level of control on. First off is your geographical location. Your location can play a large role in your premiums. Rates vary from state to state, and then within states from city to city. According to insure.com, the most expensive states for car insurance are Michigan, Louisiana, Florida, Texas, and California, in that order, while the least expensive are Maine, New Hampshire, Ohio, Wisconsin, and Idaho. In addition, whether you live in a city or a suburb can play a large factor. Due to higher rates of vandalism, theft, and accidents, urban drivers pay a higher auto insurance price than those in small towns or rural areas. This can factor in not only where you live, but also where you work. For example, if you live outside of Atlanta, but drive into Atlanta every day for work, your insurance rates will likely be higher due to driving into a city so frequently. Also, where you park your car, whether on the street or in a secure garage, can impact your rates. Another factor that goes into your insurance rates is your marital status. Married couples have been found statistically to be less of a risk to insurance providers than their single counterparts and have been shown to have fewer accidents and claims. In fact, the National Institute of Health found that single drivers were twice as likely to be in an auto accident as married drivers. Further, many insurance providers provide discounts for having multiple cars insured through them on the same policy. As a result, once you get married, you can often save more on your insurance. Your vehicle type also determines your insurance rates. For example, large SUVs and luxury cars cost more to insure than common sedans. Insurers look at purchase price, theft rate, cost of repairs, accident rate, and safety tests of each model to then rate accordingly. Further, they also look at not only how well it protects its occupants, but how much potential damage it can inflict on another car. Similarly, what is your vehicle use? Is it for personal or business use? Do you use it to commute to school or work, or is it a car you only take out of the garage once a week? Cars used for personal use or that are taken out less often are cheaper to insure than those for business use or for daily commutes. The next factor is miles driven per year. Some insurers will charge you based on an estimate of your miles driven. The more you drive, the higher your premiums are. So this could provide substantial cost savings, especially lately as many are still working from home. If you drive 10,000 miles a year, you'll pay less than someone who drives 15 to 20,000 miles a year. Credit history also plays a role. Fair or not, those with lower credit scores are considered riskier as they are perceived to be more likely to make a claim on their insurance than those with higher scores. In fact, research has shown that those with scores under 600 are more likely to file more claims, file inflated claims, or even commit insurance fraud, thus increasing their premiums to protect the insurer in the event that biasness proves true. This is just another reason to do what you can to keep your credit score high. The next 4 factors are all based on your personal history or track record. For one, your driving experience plays a role. If you just got your license, whether you're 16 or 6D, your rates will be higher than they would be had you been driving for 5, 10, 20 years. Driving record plays a huge role. For this, companies will look to see if you've had prior accidents or moving violations. This is why when you shop for rates, you'll likely be asked if you've been in any accidents in the last 5 years or received any tickets in the last 3 years. They do have access to that information online, so they will confirm this information prior to finalizing your rates. And this factor can often be one of the biggest reasons for a large price discrepancy between providers. So if you ever do get into an accident or receive a moving violation, consider shopping around at your next renewal, especially if your price increases drastically with your current provider. Even a minor violation such as a speeding ticket can increase your rates by 20 to 40%. What is your claims history? Insurers can see if you made claims with them or previous auto insurers. At-fault claims will likely result in a surcharge, whereas not at fault collisions and comprehensive claims may not. They also will analyze how much was paid out, as claims below certain thresholds may keep you from having a certain surcharge, which could be regulated by state laws as well. And if you've had multiple claims, you'll likely be considered higher risk than someone with only a single claim, and you could have your rates either hiked up or your insurer may even choose not to renew your policy at the end of your term. Finally, what is your previous insurance coverage? Make sure to never let yourself have a lapse in coverage, as even only a single day without auto coverage could lead to higher auto insurance rates as well as potential penalties. If you won't be driving or if you plan to leave the country for a few years, keep a non-owner's auto policy, which is typically pretty cheap, so that when you do return to driving again, you'll have kept continuous coverage. This is very important, as the higher rates due to a lapsed policy will add up and lead you to paying much higher premiums for several years to come. This doesn't have to be with the same company. Just make sure whenever you do switch providers that you wait to cancel your old policy until your new policy begins. The 13th and final element used to determine your auto insurance premiums is the coverages and deductibles. Understandably so, the more you include on your policy or the higher coverage amounts you select, the higher your premiums will be, and the lower your deductible, the higher your premiums will be. This can be a challenging question to answer. What I like to do when I'm shopping for new rates is to see how much different the rates would be based on different coverage levels, deductibles or inclusions, and then weigh out how likely I believe it is that I will need to use that coverage, and based on that, is the added cost worth the additional protection? For example, if lowering the deductible from $1,000 to $500 adds only $20 per 6 months, well, that would pay for itself if you were to get in an accident in the next 12 and a half years, so maybe it is worth it. Whereas if it added $100 every 6 months, that will result in paying more if you don't get in an accident in the next 2.5 years, so you probably shouldn't opt for the lower deductible in that instance. Or your insurer may offer something like roadside assistance, but you may already have AAA, so do you need double coverage? Each state has certain minimum insurance requirements, but depending on how risky you perceive yourself and those around you to be, or depending on how much value you place on your own car and self, you may choose to opt in for more coverage. It's a risk versus reward question at the end of the day. So those are the 13 factors that determine your auto premiums. Outside of that, there are other things you can do to help lower your premiums. Different providers offer different discounts. You often just have to ask for them. For example, some insurers will provide a discount to those who have a college degree, or may offer a good student discount to those still in school making good grades. Some insurers provide discounts for being part of different membership groups or organizations. Some may offer discounts due to having additional safety equipment such as OnStar on your car, or for those who set up automatic payments or paperless billing. You could get a discount if you've completed a defensive driving course or a drug and alcohol awareness course. And then some companies offer discounts to certain lines of work, such as being a teacher, for example. Or some of the bigger discounts you may get is through bundling your home and auto with the same company. Depending on the company, you may get a discount on either just the auto policy or on both the auto and home policies that you insure, which would lead to even more potential savings. However, it does not always make sense to bundle, so make sure to get rates both with and without bundling. In fact, for us, we only moved over our auto policy at this time, as even with the higher rates for not bundling, we still end up saving more by doing it this way. It's just how it happened to work out for us, as well as a couple of other reasons why we chose to not move over our homeowner's insurance right now. Further, as I mentioned before, having multiple drivers on the same policy often leads to discounts as well. Finally, something that many insurers now offer is some sort of safe driving app. In exchange for allowing them to track your driving behaviors, many insurance providers will offer reduced rates on your policy. This encourages safe driving, as the safer you are, the bigger discount you can earn. So for them, it's a win-win. And usually these programs can only help you, not hurt you. You often get a 5 to 10% discount just for agreeing to use the program, but then can earn up to a 50% discount if you practice safe driving behaviors, though for the average person, they'll realistically earn between a 10 and 20% discount, which definitely will add up. Personally, I would definitely recommend using this if offered. We opted into it for ours, and like I said, it can't hurt you. It can only help you save money and could make a big difference in your own financial situation. So this could lead us to saving more than $1,113 per year on our insurance due to extra potential savings once we start using that app. However, do make sure you do your homework ahead of time. Cheaper is not always better. In the event you do actually need your insurance due to an accident, definitely make sure the company you use is reliable and will be there for you in that event. Check consumer reviews and reliability ratings. Here in Austin, I drive by these sketchy looking buildings with their windows wrapped up so you can't see inside, and they advertise some absurdly low rates for insurance. They could be fully legit for all I know, but I'd rather go with a company that I've heard of and that I know I can trust. But to that point, which company can you rely on if you get in an accident? Hopefully you never need to worry about this, but life is unpredictable. Also, some people like the idea of having a local agent they can work with as opposed to calling into an 800 number, but that could lead to increased rates as well. A lot of this is personal preference though at the end of the day. Make sure you compare apples to apples. For auto insurance, that's pretty easy to do. Auto insurance is typically a lot more straightforward than homeowners, so make sure you're looking at the same coverages and deductibles when comparing one company to another. Consider speaking with an independent insurance broker who can shop around to multiple companies at once and get you the best value for what you're looking for, or check out a site like compare.com rather than having to call into each company separately. But if they do charge you fees for this, make sure you account for that. And as I mentioned before, make sure you're always shopping around at least once a year, as things do change and one company may be much more costly today, but turn out to be much cheaper a year from now. That's essentially what happened for us. Thanks again everyone for tuning in to the Financial Freedom Show with Chase Lawson. Remember, though it does take time to call and get quotes from different companies, this can potentially save you hundreds, if not thousands of dollars per year. Rates always change and one company won't always be the cheapest or the best value, so do yourself a favor and put that time in at least once a year. Worst case scenario, you receive confirmation that you still have the best value, but a lot of people try to find ways to save money, and this is an easy way to potentially do so without having to change your lifestyle, especially if you're already living a very lean lifestyle and are having trouble finding ways to cut expenses. I hope you enjoyed today's episode. If you did like it, please hit that thumbs up or leave a review wherever you may be listening to this episode on. That helps me know I'm adding value to the world and gives me the motivation to keep doing this. Leave a comment if you have any thoughts or feedback. And once again, please subscribe and share this with others. It only takes 5 seconds to do so, but it helps me out greatly and means the world to me. Thanks so much, stay safe, and go get 'em.